Hi, it's Michael Farr from Farr, Miller, and Washington. It was a bit of a roller coaster day on the markets. They started up basically a little bit in positive territory, and then they clicked right over that proverbial first hill and kept on going down. Numbers were not good. The Dow Jones Industrial Average fell just almost 300 points. The NASDAQ fell over 100 points to 4877, and the S&P 500 fell 30 points to 2061. Tech stocks got hammered today more than the other industries, really. I read a cool article that I'm not sure that I've seen this before. The suggestion was that coming into quarter end, companies that are out there doing share buybacks stop in the couple of weeks before they report to end out their quarters. That's logical. It makes sense. But it's the first time I'd read it today. It's something I'll probably pay attention to as we come into the final few weeks at the end of next quarter, just to see if we see this pattern repeat. We've been saying for some time that these stock buybacks have been very important and have been a big driver of stock market gains and stock market valuations. One of the benefits from very low borrowing costs. We've also seen the dollar, rise dramatically, become a whole lot stronger. It gave back a little bit of ground today, around $1.09, $1.10 to the euro. Still relatively attractive. Things in the markets never move exactly in straight lines one way or the other. We follow a jagged pattern, lower or higher. So that we've had a little bit of a pullback in the dollar briefly, doesn't bother me much, and certainly doesn't interrupt the overall trend lower. Crude oil, $49 a barrel. Gold, slightly below $1,200 an ounce, and the 10-year Treasury at 1.93%. All in all, we are seeing this downtrend over the past couple of weeks, a little bit of a pullback, and I don't think any great reason to be concerned. The market's been awfully high for a while. I wrote this week about the strong dollar, what it means to the Fed. I think that we need to watch that dollar, the importing of deflation, because the dollar's so strong, we're able to buy so many cheap goods from overseas. When the consumer begins to think that they can just wait before they buy a refrigerator because in a couple of months it might be cheaper, that's a really difficult problem to solve economically, and the Fed fears it. So we think the Fed's still in a bit of a bind. The economic data aren't all that powerful. They're still positive. So the music continues to play at the Federal Reserve. I've written about it this week in our free market commentary. I hope you enjoy it. If you have any questions, send us a note. We really do enjoy hearing from you. Hang in there. The seas are getting a little rough. Make sure you are in a good, safe boat and that you know where your life jackets are. If you need some help, give us a call at Farr, Miller in Washington. In Washington, D.C., I'm Michael Farr.